Welcome to Tech Talk Tuesday. There are several important things happening in the stock market right now that we will talk about today. We are recording on a Monday so that you can listen in on a Tuesday. It's Monday, December 18th, 2023. My name is Karla, and with me today is your favorite CMT, David Blake. David, how are you doing this morning?
I'm good, Karla. Thank you.
All right, well, let's jump right into it by taking a look at last week's stock market activity and what's ahead.
Okay, well, I guess investors were pretty happy again last week. They bid stocks up for a seventh straight week. We were up, well, actually, had some pretty decent gains last week. I think the small caps outperformed. They were up they were up 5.5%. I didn't realize it was even that much. And we had the Philadelphia Semiconductor Index was up about 8 or 9%. So we had some big moves in the secondary indexes, which is what you want to see. That's also a case of the market broadening out. But anyway, we started the week a little slow. People were a little bit on the sidelines waiting for the CPI, the Consumer Price Index, and also the Producer Price Index to see how we were doing on inflation. And of course, the FOMC meeting announcement came out on Wednesday afternoon, left rates unchanged, which was expected. But we got kind of a little bit of a surprise in the fact that Fed Chair Powell actually talked about basically they could foresee some rate cuts next year, as many as three, which the market really wasn't expecting that. And we got a heck of a rally. I think the Dow Jones was up over 500 points on that day. The NASDAQ was up 200 plus. That was the best day it had had since the first week of November when this rally kicked off. Then you kind of came in here on Friday. You had where we started up pretty decent, and then we had New York Fed President John Williams came on Friday. He tried to talk back a little bit of the excitement for investors, just saying that March is probably too early. The committee's not even talking yet about cutting rates, so that took a morning. It clipped a morning rally that we had, but then towards the end of the day, we saw stocks moving up. That was also triple witching expiration date as quarterly options start to unwind. People wanted to remain long going into the first of the year, so we got a late boom and then a little bit more of a sell-off right the last like 5 minutes, which that was just option expiration making that volatility for that.
Okay, those are indeed important events. How about the technical condition of the market? Where are we standing?
Not a bad week in general. The technical condition of the market, it kind of improved last week, not a lot, but the main thing was that we've been mentioning for several weeks, we're very overbought. In fact, it's probably the most overbought the S&P 500 has been since 2018. And the way we measure that is by different indicators. One of them is the 14-day RSI, which is a momentum indicator. It actually hit 85, I think, for the Dow, and it was in the high 70s for the other indexes. In general, if you're above 70, they consider that, technicians consider that overbought. So when you get up to 85, that's somebody ringing the bell saying, hey, this is, we're near the top on this thing. I wouldn't be jumping in here to buy things. So that happened. We also saw signs of the market being overbought by other measures. One of them was that, and generally anything above 70% of stocks in the S&P 500 trading above their 50-day moving average is considered overbought. And we're at 83, 84%, and looks like it's going to be even more than that today. So we're pushing to 90% of the stocks in the S&P 500 trading above their 50-day moving average. You don't see that very often at all. We also had a little bit of the MarketEdge S&P short range oscillator, Jim Cramer's favorite overbought, oversold indicator. We saw that it's actually up around 5%. It's not as high as it was 2 weeks ago, but still just showing that there should be some caution in buying new stocks at these levels in here. So we'll kind of watch that. Last time that we actually also saw that I wrote about, we saw the S&P 500 itself about 10% above its 50-day moving average, which is something we kind of watch over here.
When was the last time that happened?
The last time that happened was back the first week of August when at the summer highs. And once we got some bad news coming out, the market traded lower on 5 of the next 7 weeks. So, when something is, I just want to stress, just because the market's overbought doesn't mean it needs to, come down and sell. It can work that overbought condition off by trading sideways, or maybe it pulls back a couple times. Investors buy the dip, and you end up just again kind of going sideways in a trading range, and that can work off that overbought condition. But right now, I think as we churn a little bit higher in here, I don't think I'd be wanting to buy much of anything this time of year. You have some profits, and a lot of investors and traders don't want to take profits the last week or so of the year because they're going to have to pay taxes on that. So they'll let some of their winners ride for another week or two, and then you might see some again churning, but probably a little bit to the downside as they take some profits, possibly in some of the Magnificent Seven.
If we saw a sell-off in that category, how much of a sell-off do you think we could expect?
If that's the case, then you would probably see the market pull back a little bit more, and by that I would say maybe in the 7 to 8% range, because if they do sell the big cap tech stocks, we'll have to wait and see. I don't think I'd be the first to sell them, but I would keep that in the back of my mind.
Okay, talk to me about market breadth. How are we looking right now?
Okay, we also saw underlying breadth decent last week with the NYSE and NASDAQ AD lines, which we consider leading indicators of market direction. They pushed higher, and they also, I think on Thursday, they made a new high for this cycle. So that's good. That means that just shows more accumulation and a broader number of stocks. That's good for the rally. We also saw new 52-week highs outnumber the new lows by a wide margin, and they actually even expanded. In fact, for the New York, we had 482 52 new highs last week and only 71 new lows. In the NASDAQ, we had a second week of more new highs and new lows, which I don't even know when we did that last, probably back maybe in June or something like that. So a second week of that was good. We had 651 new highs in the NASDAQ, which is, that's a good indication that people are buying a lot of these secondary stocks, especially the small caps.
And how's the market sentiment right now?
The last thing we had was a sentiment indicator. We're starting to get we're getting close to irrational exuberance. Bearish investors are hard to find right now. And we had the retail investor. They're the most bullish since July of 2020. That was after when the pandemic came, and all of a sudden the market was doing that V correction and heading towards the new highs. That was the most bullish last week that we've been since then. And then we had the MarketEdge Sentiment Index hit a -6, which was last hit in December of 2019. So when these sentiment indicators get to extreme levels, they're considered a contrarian indicator. And again, like an overbought market, just because everyone's overly bullish isn't a sign that you go out and start selling everything to be on the other side of the trade. But it does put up a red flag for equities over the near term, and kind of tells you that I don't think I want to be buying in here at this stage. Thus, part of our neutral rating on the market. We don't see a -6 in the sentiment index very often. In fact, it's been years, I think, since that's happened. So anyway, as we wrapped up the week, the Dow was able to close at another new all-time high. That we did actually just kind of had some people talking about the Santa rally came early, and it's been a great end of the year.
Yes, the Santa rally. So, have we already seen the Santa rally, or is there more to come? What are we looking at here?
The actual Santa rally itself doesn't actually start until this Friday. It's considered the last 5 trading days in December, plus the first 2 trading days of January. Yale Hirsch, who's the author of the Stock Traders Almanac, he identified that in 1972, and I think it's something like 80% of the time that indicator has worked out. The market's up the last week, and on average, we're up about 1.5%. So I would expect to see the way things are going right now. Today, we're up again. Looks like the Dow and S&P will be up for an eighth straight day. That I don't know when the last time that was. I'll have to look. I'll see if I can put that in maybe today or tomorrow's daily comment. So I think today you'll probably have some decent activity, and then maybe some volatility coming in. Then probably going towards the latter half of the week, you probably will have a little bit of a slowdown until Friday. And Friday we get the PCE that comes out for December. That's kind of the Fed's preferred gauge on inflation. Right now, I think we're looking for on the core PCE month over month, we're looking for a rise of 0.2%. And year over year, I believe we're looking at, I think it's 3%, which is, so we're getting close to that 2% in inflation gauge at the target that they want. We'll have to watch that on Friday. Of course, I think that it will probably, I don't think we're going to see any upside surprises. In fact, I think the Bank of America already said this week that they think we might only see a 0.1% rise in the core PCA month over month, which that might give you a little bit more of another pop to finish the week, a little holiday cheer, if you will, and that could move the market. But if it comes in line with those numbers, then you probably have everybody go home early, and well, then we'll see that. Then that'll kick off the Santa rally, and I think from there we'll just nudge higher a little bit into the into the next week.
You mentioned in Friday's daily comment and actually earlier that the market hasn't been this overbought in years, and I think you mentioned hasn't been this overbought since what, 2018?
Yeah,
Um,
2018.
okay, and can you explain in simple terms why this is such an important technical event?
Okay, what? Well, sometimes when you have a market, especially one that's going up like it has like for 8 weeks, can we go to the charts? I want you to put up SPY and then go back at the bottom. You can grab that thing and pull it back to around 2018, 2017. Okay, that's good right there. All right, where are we at here? January 2018. Okay, over here on January 2018. What you see over there on the far right is you're going to see these are weekly charts now, I believe. Yeah, these are weekly charts. And so all of a sudden, a stock or index can stay overbought for a while. A lot of the reason that it can is you don't, as soon as you get to that overbought reading, you don't go out and sell, is because everybody's on board. They're running to catch the train. They don't want to miss out on the gains, and it induces more buying. So it usually will have a higher, it'll usually go higher for maybe a month more. As you can see over here on the far right of this chart in January 2018, what you ended up having, actually, if we can make it go to the right a little bit more so we can see what happens after this.
All right.
Yeah, grab that right on the right side down to the bottom. Okay, let's see what happened there after that. This is what we call uh, a blow off top, is basically. Everyone's jumping on board. You can see that the market's just going straight up, and then all of a sudden, boom, it gets hammered. Now down below that, you'll look at that the 14-day RSI down to the first indicator at the bottom of the chart, right there. You're gonna see we're up around 85 on that thing. That's close to where we are right now. But I don't think we have a blow off top right now, unless we would all of a sudden see the market come in one day this week, something comes out and it goes up another 500 points. Then I would be talking about a blow off top again. But when you get these big moves, and you can see that last green arrow before we start to go down, I'm not sure what happened there. Something with the Trump, something around that. I'm not sure what caused it. But as you can see, when you get this blow off top, all of a sudden the market's so overbought, everybody's jumped in. The thing starts to have a pullback, and everybody's like going, "Holy crap! I got to get out of here." And then usually you'll have a big sell off like this, and that is I'm not worried about that right now. But we're in the phase right now where we're seeing accumulation, across the board. That's broadening. The rally's broadening. We're up here for possibly this week would be an eighth straight week. And if the Santa Claus thing kicks in, we could be up for 9 or 10 weeks in a row, and that hasn't happened for a long time. So that is why when you get these overbought conditions like the RSI, like we are right now, up there pushing on the Dow around 85, you at least want to take notice of it and be aware of it, because these stocks don't grow to the sky. They go higher, and then when they've hit a peak, they're going to turn over and they're going to revert back to the norm. And at some point here, we might see that. What's going to cause it, I don't know. It could be the fact that, right, everybody jumped on board for a March rate cut again last week. And I still don't think that's what we're going to see, which pushes it out to May or June. Maybe that causes the market to rattle people up a little bit and causes a bit of a sell-off. That's something to be aware of. So again, that's just the fact that that this overbought doesn't mean we're going to pull back right now or the next week or whatever. But be aware that if we start to pull back, you probably will see the selling pick up, because a lot of people that are buying here at the top are going to go, uh-oh, now, all of a sudden I'm down. This thing's already up so much that I got to get out too. And it just kind of feeds on itself. And you have the market goes up more than it should, and then that follows by coming down more than it should. So that's just something I would be aware of on these overbought conditions.
And then maybe this is actually a good time since we have the charts up. You mentioned that the MarketEdge Sentiment Index hasn't hit a -6 since 2019. What happened after it hit that extreme level last time?
Okay, go ahead, grab there at the bottom and pull that right side over. Let's go. Okay, that's good. Yeah, right around there. Okay, this was in, let's see, Jan 12/22. Okay, when you had the sentiment indicators, ours a negative means it's people are too bullish, and when it were the +5, +6, that means people are too bearish. Anyway, when you have investor sentiment get this bullish, again, that's the red flag, like I mentioned earlier. And the problem is that the market usually will go up for another month or so after that. And the reason being is that you have all these people, or they're reading the paper, the TV, you're talking about, hey, this market's going big. They start bringing people in off the sidelines, fund managers and stuff that are saying, yeah, we're invested in the market. We want people to give us your money. We think the market's going up much higher, and everybody gets excited about it. And that excitement doesn't just because everybody jumps on board end right there. They're in. They're hearing about it on the news. They're telling their neighbors. The dentist is telling them that what he just bought. They're getting all excited about that, and then and because of that, that's that fear of missing out. They call this the FOMO type of investing, and that will usually carry the market higher or lower, whichever way it's going, for another couple of weeks. And then once you get to the top, then everybody says, okay, we're all in. Well, once everybody's all in, they've already spent all their money, and there's no more money to go into to buying stocks. And all of a sudden, you're seeing the buying pressure has dried up, and so at that point, the smart guys are going to say, you know what, everybody's already in here. I might as well get out, because I don't think there's nobody around to push this market any higher. And then you'll start to see the market roll over, and then it goes to the point where everybody starts to get bullish or bearish, and then that's when the smart guys start to jump in again and buy things. So just the fact that the sentiment has reached always say last time that was like this was back in December of 2019. You'll you can see on this chart, push a little bit higher, but at some point you have to decide that, okay, that everybody's in. There's nobody out there left to buy. So you get a little bit more of a couple of weeks, then you might churn sideways or something like that for a little while that overbought condition, and some of the bulls kind of get a little bit scared. They get a little bit too complacent, and that's when the selling starts, and they're not worried about it. And then the market goes down a little bit more. Then they really get worried about it. Then everybody starts to become bearish. So again, that's just something a red flag that you want to be aware of. It's not, but just know that when you start to get to these extreme levels, when you do have a little hiccup in the market, that it's probably going to be overblown on the other side. In other words, if we're expecting, like, say, a 4 or 5% pullback because something's so overbought, when it gets to these extreme levels like this on the overbought and also on the sentiment, you might see that turn into a 10% pullback, because there's so many people that are in, they get scared.
That is very helpful information to know. David, as we're wrapping up this week's Tech Talk Tuesday, is there anything else that you'd like to add?
No, not really. I think that it's been a good year for the market. Thank goodness for the rally going out from this past October. kind of saved a lot of people's portfolios, got everybody in a good holiday mood. And again, I think that this next 2 weeks here, we're probably going to turn, nudge a little bit higher. But I do think with some of our cycles, and we're kind of resetting some stuff in here, that probably maybe second week or third week of January, we might see that, we might start to see the market pull back a little bit. I think that's when the reality of, okay, well, March is probably too early for a rate hike, rate cut. I mean, and you might get some people deciding that they'll back off the equities and maybe lock in some of their fixed income investments around that time too. So I'm going to be a buyer in here, and I think you'll probably get a better chance after the first of the year, maybe second or third week of January. You can have your list of stocks. If you go into MarketEdge under Stock Watch, make a list of stocks right now that are outperforming the market on the 50-day relative strength. Get a list of those that you like, put them in a Stock Watch list, and then when we get that pullback, you can go in right here like this. You can go into this, and it'll just show you which stocks you want to add to, which ones are maybe the opinion got downgraded to a neutral, but you're ready for it to go back to a buy. And that way you'll know which stocks look good. You'll find out what resistance level or support levels they have, and have your list ready to go. And when we do get that 7 or 8% pullback, you know which stocks you want to buy, and you're ready to move on them.
All right. Well, thank you again, David, for another excellent MarketEdge Tech Talk Tuesday. And we'll wrap it up for this week. I think we have a solid show. David, thank you again for all of the great information as always. And you guys can catch us again next week.
Okay, just tell everybody a happy holiday, Merry Christmas, and we probably won't have a tech talk next week, Christmas week.
That's right. I guess it's Christmas. It is Christmas next week. Well, happy holidays to everyone, and I guess we will catch you next year.
Okay, sounds good, Karla.